Hello, everyone, and welcome. Thank you so much for being here. So, my name is Teresa, and I am the general manager here at Atrium. And I am really excited for today's session, not only because we're going to dig into a company doing something pretty interesting in DeFi, that I think starts to deliver on kind of the awesome potential for on-chain finance, but also because I love the chance to spotlight the incredible alumni who have gone through the Uniswap Hook Incubator and the work that they continue to push forward as a part of the community. So our guest today is Robert Leifke, who is the founder of Numo. And Numo is a company on a mission to sort of tackle the real world problems companies are facing in markets with volatile currency and to make FX hedging accessible for frontier markets on chain. Robert is also a graduate of the very first Uniswap Hook Incubator cohort. And so he's been a part of this community from the beginning and really glad to have him back to share what he's been building and what he's learned along the way. So, Robert, welcome. I am grateful you've made time to chat today. And I'd love to just start with a brief intro from you about who you are, your background, and kind of your initial journey into Web3.
Yeah, for sure. Happy to be here. My name's Robert. Most of my background is actually in crypto. So I got into crypto, I want to say, around college when I was working on automated market makers with a friend from college. We ended up actually starting our own project where we were trying to build these AMMs for derivative instruments. Unfortunately, it didn't really work out very well. But at the time, I always thought you could apply a lot of these derivative instruments to hedging applications. So not just speculating, but hedging. And that's basically how Numo came about.
Amazing. Um, and like I mentioned, you were in the very first cohort of the Uniswap Hook Incubator. I'm curious, what made you decide to do that initial cohort? And, also if you want to share, like, what were you working on coming into that experience? And then what had changed for you by the end of it? Or what have you, shifted about your Web3 experience?
Yeah, that's a good question. So when I got into the cohort, I originally came in with an idea for fixed rate borrowing on FX stablecoins. And the reason why I led with that idea is for two reasons. The primary product was to offer these FX forward instruments, which are these really well traded derivative instruments that a lot of micro lenders and importers use to lock in an exchange rate for a future time. But in order for you to get a forward rate, you need a money market that supplies the essentially fixed rate cost or funding cost for a local currency. So I came in with that idea. I was going to use an automated market maker to price the interest rates for this stuff. Unfortunately, a few months after Atrium, I deployed it, and no traction, no usage. Apparently, no one wants to borrow at a fixed rate local currencies, and certainly not through an AMM. So since then, I've moved my direction a little bit, but for the most part, still doing hedging of FX risk.
Got it. And so it sounds like, Uniswap before and kind of like Uniswap more broadly actually was a super helpful system for you to learn, given that the focus was building out, or using an AMM. And obviously Uniswap is kind of that big one. So I imagine that was something of a driver. But besides, that focus on AMMs, how, if at all, have you continued to use what you learned in the Hook Incubator, or have you found any other aspects of what you learned useful?
Yeah, I think unfortunately, the Uniswap direction didn't really hold, but I think for a lot of AMM companies or folks that are trying to build around these AMMs. The Hook incubator is fantastic, right? Because the Uniswap position manager allows any router to interface with your AMM. It does the liquidity aggregation for you. So it's really, really great. For my use case, it ended up not being so, but for the most part, I encourage anybody that work on AMMs to build on V4.
Yeah, and then last question kind of on your background, and we'll start to talk a little bit more about Numo, but what advice would you give somebody who's just starting out in Web3, or even just starting out like with Uniswap, but given your kind of long background and your experience navigating through different systems and protocols and primitives, like what do you think somebody needs to do to get started now?
Yeah, so the good news is starting anything is pretty low barrier in crypto. Because for the most part, everybody's super friendly in crypto. A lot of the software is open source, so it's super easy to just look through the code bases. And these days, it feels like everybody has heard of crypto or has interacted, with it. So for the most part, all it takes is just getting on Twitter or X and setting up an account and messaging people and interacting with a lot of the open source tools.
Yeah, fair enough. It's like much easier than I imagined, like when you were getting started, and a lot of it was a little bit more like on the early edge of building and a lot of digging through documentation. So I want to talk a little bit about kind of what led, you mentioned that this is something you've been thinking about for a while, the idea behind Numo, but to my understanding, Numo's thesis is really that on-chain markets need to serve kind of real-world obligations like FX, trade, sovereign debt, and not just focus on speculation. I'm curious if you could talk a little bit more about kind of where that convictions come from for you, and what made you decide that that's the work you want to focus on solving for?
Yeah, that's a very good point to bring up. Well, so in the last, call it, decades, crypto's gotten really good at bootstrapping markets for long tail assets and making them over time a little bit more efficient. The problem is the end user for these markets are mostly speculators, and that is not a very sustainable market, in my opinion, because speculators come and go, and two, it doesn't really provide a lot of utility. And the core interest of mine in finance to begin with is to provide some sort of utility. And for the most part, finance does this in transferring risk between things. So in the case of FX, which is a market that isn't very efficient in frontier currencies and emerging markets, you need finance more than ever. You need ways to reduce risk and transfer that risk onto other folks. And so, now that we have stable coins and on-chain assets that peg value to real-world currencies like the Nigerian naira, the Kenyan shilling, feels almost crazy not to build these markets around hedging real-world FX flows where there's so much risk and not enough financial infrastructure to serve it.
Yeah. And I realized that maybe actually we should step back one level for anybody who's watching and like doesn't know what FX is, or like isn't really familiar with currency exchanges. But so I'm certainly not the expert, but I'll kind of say like what I think the problem is, and then allow you to layer in some additional context. But my understanding is sort of like big, the currencies obviously shift in terms of relationship to each other. So like what you get for like €1 to $1 isn't the same day to day. And that's even more extreme when you're talking about currencies in more volatile markets or in developing areas. And that's fine for big companies who, have systems in place to minimize the fact that they might do a deal in two different currencies. And by the time the deal closes and they get paid, the rates are really different. And where that actually has a big impact is smaller companies and little businesses who, the point at which they agree to a deal, by the time they get paid, if that exchange rate is wildly different, they might be losing money on that deal, or they might have, a wildly different profit margin. And so I think that's kind of like the place you're trying to step into. But I wonder, anything else you want to clarify in terms of like that problem set?
Yeah, I think you summed it up perfectly. A lot of people interface with foreign currencies, and it's a problem that the majority of the world deals with. So if you're a business, you raise debt in U.S. dollars, but your cash flows are in a local currency. There's a constant mismatch, and unfortunately for a lot of folks, currencies in emerging markets are super volatile. And I always make this joke: if you're familiar with meme coins, and you've traded meme coins, then you're familiar with Frontier FX, because Frontier FX can be just as volatile as meme coins. And so the real approach that I'm taking is what kind of derivative instruments can we use that we've built in crypto and apply it to Frontier FX to do exactly what you said, which is lock in an exchange rate for a future time or provide some sort of insurance policy for a future price.
Yeah. And I think that will actually probably resonate a lot with people who are watching this, is like, imagine trying to run a business by like meme coin. And it depends, day to day, how much money you actually have. But like we kind of mentioned, this is a problem that, I would say, millions, hundreds of millions of people face across the globe. That being said, I imagine that the majority of the people who are hurt by this aren't super familiar with Web3, with decentralized finance, with like blockchain. So, like FX hedging for frontier markets may not be this obvious thing for them to build or for them to buy into. I'm curious, who are your earliest customers, and how have you found folks to partner with or to work on this with, and what have you learned talking to them as you get started with Numo?
Yeah, so I always preface every interaction that I have with someone as this isn't as much of a crypto product as it is truly an FX product that happens to use stablecoins. And so right now, I have a ton of micro lenders mostly that have a large US dollar debt exposure and a large local currency exposure that they're getting cash flows in. And most of the time, people are trying to either buy forwards, but because it's so expensive, or because they have a poor credit rating, they can't access it. And so what I've done is I've essentially become the matchmaker. I've built a business or a marketplace that allows these micro lenders to buy something called options, which are sort of like an insurance policy against currency volatility.
Mm-hmm.
And that entire process is very fiat, very banking, traditional finance. The thing, or maybe the involvement of crypto, is really to scale liquidity. The problem with frontier currencies is that the settlement systems for US dollar to, let's say, Nigerian naira is kind of screwed up. It goes through this correspondent banking system, and not every major bank in Nigeria is part of this correspondent banking system. So they usually interface with one or two current banks in different jurisdictions, and sometimes different currencies to get to the end currency. And so what I've essentially done is I've built these derivative marketplaces using stable coins to scale liquidity for market makers. And these market makers then use this derivatives marketplace to hedge their own exposure. So the flow is a microlender buys a call option to protect themselves from currency volatility. That market maker now has a ton of risk because they've sold that call option. They need a place to hedge that risk. And so they come to an exchange that's provided by us to hedge that risk without needing essentially this bilateral credit relationship that you usually do in the traditional banking system.
Got it. So, and again, kind of like I said at the top, I really love the fact that Numo is sort of not like fully just crypto for crypto's sake, but actually like using it to solve something that exists as a problem outside of the Web3 community. But so you mentioned that you're working mostly with micro lenders. I'm curious, like any insights into what types of users are like. Is there a particular part of the world where you're finding the most interest or traction? Like how are you thinking about getting kind of that initial user buy-in and momentum?
Yeah, that's a good question. So I'm currently based in Nairobi, right? But I would say the majority of my business is in Nigeria, and that's because the Nigerian naira is super unstable at times. And the end user, like I said before, is a micro lender, but those micro lenders are for the most part kind of like everyday users. They might not have access to a tier one bank, or they might not have an existing credit relationship with a broker. So for the most part, they're looking for a very easy, accessible solution to manage their currency risk without having to go to JP Morgan Chase or Goldman Sachs to get a quote on a call option or a forward instrument.
Yeah, that makes a ton of sense. And I know from having spent a lot of time working with, Atrium and the Uniswap Hook Incubator, that there's a ton of interest in and familiarity with crypto across both Nigeria and Kenya, but was curious kind of where you're seeing traction. And sounds like, and it makes sense. Also kind of talking about like getting that early traction or like what it looks like as you're getting started. I'm curious what you've learned as you've been launching. Like, is there anything you wish you knew earlier, or anything that you've discovered in terms of insights for figuring out product market fit and kind of figuring out what it looks like to try to launch?
Yeah, I think, I mean, I've learned a lot in the process, and I've made so many mistakes by now. But I would say the biggest one is don't listen to ChatGPT. Like when I started, this project, I very very clearly wanted to hedge foreign currency risk, and I didn't really care too much what instrument or how, but I really wanted to get to that mission or objective. And if you were to ask ChatGPT, how do you hedge foreign currency risk? It'll very clearly say FX forwards, and FX forwards are the dominant method to do this. But when you actually go and meet micro lenders and go to Nigeria, you'll figure out that FX forwards just don't really work very well. And they don't work for two reasons. For the most part, frontier currencies have super high treasury rates. So you can right now earn something like 28% on just holding Nigerian naira and putting it into treasury bills. And why that's a problem for FX forwards is because FX forwards are priced on the interest rate differential, which means that you're going to be paying an insanely high premium or difference from the actual spot rate just to hedge that risk. And then on top of that, FX forwards are effectively unsecured credit loans. So the only people that are able to buy these FX forwards are people that have an existing credit relationship with a bank. And so over time, you kind of learn that the instrument that people really care about, especially in emerging markets, is more of like a devaluation insurance policy. So people are willing to take the 5% volatility, but they're not okay with the 20% depreciation risk that's very real in emerging markets. And call options are kind of perfect for this because you don't need a credit relationship. You just pay a premium up front. So it's very simple and easy to trade on an exchange. And then on top of that, you're protected from these black swan events where Nigerian naira can go down by 40%, but because you bought the insurance policy that protects you from that 20% or up devaluation, you're fine.
Yeah, that makes sense. And then I am actually just gonna pause this really quickly and tell the folks watching either on YouTube or on X, if you have questions for Robert, feel free to throw them into the chat. And we are happy to take questions from folks. And and I'll kind of either pull them in real time if it makes sense, or we can save them for the end. But I want to make sure that if what we're talking about is interesting and you have questions of your own, that we take the chance to answer those as well. So with that kind of plug, as I was doing a little bit of research coming into this, so I think you just recently launched or like shipped Numo engine. And I was curious if you could walk us through kind of that project. What is it? Why build it now? And anything you learned in shipping that.
Yeah, so Numo Engine was a way to price the interest rates for Nigerian Naira stablecoins. There's this regulated stablecoin, the same way that the U.S. has USDC issued by Circle. There's this regulated stablecoin in Nigeria called CNGN that's issued by this company called Wrapped CBDC. The problem, for the most part, with FX forwards, when I was very down the rabbit hole on that, is that it's priced on the interest rate differentials, but there's no real liquid offshore money market for Nigerian Naira treasury bills. And so one of the beauties of building a money market on chain is that you don't need to essentially access these treasury bills in Nigeria. You can just swap from Nigerian Naira stablecoin into a synthetic treasury bill. And the difference in those essentially give you an interest rate that you can use to price FX forwards. Long story short, bad idea, no real product market fit, and ever since I've moved away and done these OTC options with.
So I think that actually I bring that up just because I think one of the things that is really interesting for folks who are founders is and that you just spoke to is you iterate through different product ideas, and you've done that as you've been building Numo and as you've worked in DeFi. But how do you think about what's the right thing to build? How much, validation do you think about getting for it? And then also, how do you handle that decision-making process of when do you keep pushing versus when do you pivot?
Yeah, that's a good question. I don't know if I've really mastered that yet because I've been, because I tend to work on things that don't have product market fit. But I will say, at the end of the day, you need customers and you need end users that are willing to pay for something. And so if you launch something and there is clearly no one that is interested in giving you money to provide that service or product, then it is probably best to pivot. And the way that I see pivots is more, rather than changing the direction or the objective, you want to change the vehicle in which you're getting to that objective. So, my objective very clearly is hedge frontier FX risk. If you were to be even more narrow, it is to hedge Nigerian Naira. And even though FX forwards didn't work, and even though automated market makers for FX forwards didn't work, I'm very much still going after that objective, but now doing it with these OTC trades using call options to hedge the risk.
I wonder if you can talk kind of a little bit about so obviously when something doesn't work, rather than this full pivot, you were saying you kind of shift the approach that you try. How do you, what leads to the decision of what comes next, and how are you kind of deciding this solution versus anything else? Or is it sort of this is the only obvious one that there is?
Yeah, I would say it's mostly context. So building up enough context to propose other possible solutions and then just putting it out on the market. In my opinion, the end user almost never knows what they want. A couple months back when I was testing out FX forwards and asking micro lenders and importers, all of them said, yes, perfect. That's exactly what I want. When you actually build that product and give it to them, they'll say, oh, actually, I'm comfortable with 5% and FX forwards are too expensive. So then, with enough context and knowing how options work and what the utility of options are, you can build a product around that and put it out on the market and see if there are end users that are willing to pay for it. And so that's where the iteration cycle comes in. Is you just need to build enough context. You need to keep pushing out products until one user says, "Hey, this is good enough, and I'm willing to pay for it."
Yeah. And then that becomes kind of like that feedback loop that pushes you forward. So that makes sense. And I think is kind of that testament to what we had talked about earlier around like finding the real world customers whose problem you're solving. Obviously, round one is like figure out a problem that people actually need solved. And then step two is figure out a solution that people will pay for or a way to monetize a solution for people so that the business can exist. And it sounds like you're somewhere kind of in that middle piece still, or moving towards that like second step fully. So I want to kind of pull back to something. And I know in kind of what you've written, so you've written in the past around like fixed rate markets and DeFi really only make sense when they're built for assets with time aware obligations. And I'm curious if you could, explain that a little bit to someone who is less familiar, who has spent less time in the space, and also how that particular insight has shaped what you're building. And yeah, like how do you explain that to somebody like me who's never really thought about an FX yield curve?
Yeah, for sure. So fixed rate markets kind of go back to what I was originally doing with these AMMs, but the core insight there was, fixed rate markets haven't really worked on chain, even though a lot of people have tried. And the reason why they haven't worked, in my opinion, is because the underlying markets for these fixed rates instruments are cryptocurrencies. And almost every cryptocurrency doesn't really have a time aware obligation the same way that FX does. So, to show you kind of the dichotomy, that the difference is, a cryptocurrency, you'll trade on a perpetual futures market, you'll speculate with it, or you'll probably just hold it, right? There's no real utility. You're not necessarily paying.
Yeah.
But with a currency, with let's say the US dollar, you might have to pay taxes on it. So you have a very distinct time period. Or let's say you're a micro lender and you're lending out currency, let's say Nigerian naira. You will probably expect some sort of return on that on a quarterly basis, every 6 months, every 12 months or so. That is a time aware obligation. And because you have those time aware obligations, FX, fixed rate markets are sort of perfect, or fixed rate markets on FX stablecoins, because they allow you to essentially fix your costs and meet your obligations perfectly in the way that a money market like Aave wouldn't be able to do because it's perpetual.
Yeah, that makes sense. So again, kind of back to that place of like that marriage of on-chain functionality, but having it actually function with real world finance and what it actually looks like to live in the real world, where you need to actually pay for things for your business. To pull back even more broadly, I'm curious, like the more you learn and the more you kind of gain experience in DeFi, or even more specifically about the space that Numo operates in now, what were, do you have a couple like convictions that you initially held, or insight, things that you were certain were going to be true that turned out to be wrong about the broader industry or about your kind of corner of it?
Yeah, I would say, I mean, there are certainly a couple. One that comes to mind is just how difficult frontier FX really is. I had a lot of conviction that I would be able to go in, build an exchange, and kind of fix it up overnight, and that has been pretty much wrong. And part of that has to do with just settlement risk, different vendors, different payment rails, but also there is a perception issue, right? Because a currency like Nigerian naira is very volatile, it's sometimes really hard to bootstrap a market because you always need two sides. Someone who wants to hedge needs another person who's willing to take that risk. And even though the instruments for hedging Nigerian naira has improved dramatically, it's always a very difficult conversation to have with a market maker or dealer to be like, hey, warehouse this call option that you just sold and do that for 6 months and try not to blow up. And so, yeah, that's something that I've been navigating on, and hopefully over time it will kind of sort itself out.
Yeah. And actually, you said something there, and I see we have a question from X that I'm going to pop up on screen in a minute, but I want to get this thought out while I have it. So it's sort of the most obvious thing, but as you were talking, it occurred to me that you have actually kind of two users you need to chase down. You have the folks who are like the micro lenders who want this for their business, but you also have to convince the other side, which is somebody to sort of be on the other side of these contracts of these agreements. I'm curious if you can talk a little bit about kind of that user acquisition or what you've learned, found, any insights you have, or maybe just the broader challenges of pulling in those users as well.
Yeah, so I would say the even more difficult user to get is the other side, like you mentioned. Fortunately, there are definitely dealers out there that are willing to warehouse that risk. So, I've now worked with a couple dealers that are fantastic, that are willing to sell these call options, and then even banks will do this as well. So if you have an existing relationship with a bank, you can leverage that to have them warehouse the risk. The problem with this is it's just very expensive. Because there are so few liquidity providers for this stuff, it raises the price for a lot of these instruments. So it goes back to this other thing, which is the best way to reduce the cost is to increase the supply. And the way that you increase the supply is by bootstrapping and creating exchanges, because exchanges act as the central counterparty to trades. They intermediate trades and they standardize it for liquidity to aggregate. So going from the original model, which is these bilateral credit relationships, which is I have good credit, I know my friend Larry at JP Morgan Chase, and he's willing to sell me a call. That might sound great, but it doesn't scale very well. Whereas me going to the CME, which is the Chicago Mercantile Exchange, and buying dated futures on Euro USD is significantly more scalable, right? And so this is kind of the model that I'm trying to push towards Frontier FX, which is bringing more of these exchange traded instruments and a more scalable model for liquidity to Frontier FX so that the price of hedging reduces.
And so that reduction is what makes it more, interesting or palatable for somebody to come in on that other side of the exchange. Am I getting that right?
Yeah, exactly.
And is why does somebody choose to come in? Exactly. So I'm going to pop this question up. And I think we've talked a little bit about this, but from earlier on, so you'd mentioned that AMMs and CFMMs don't work well for FX markets. Do you want to elaborate a little bit more on that?
Yeah, so I would say AMMs, CFMMs probably don't work for most markets. And really the only reason why they have worked in the past is because of retail trading flow. And they're pretty, insensitive to prices. The thing that the reason why I've been obsessed with AMMs for so long is that even though they're not the perfect market structure for these things, they're really easy to bootstrap liquidity for markets because anybody can provide liquidity to. The drawback is AMMs require standardized perpetual products for them to really work. The moment where you fragment the the product or make it more customizable, the entire model breaks down because all of a sudden it requires the liquidity provider to not just provide liquidity to the assets pair, but provide it to the asset pair, and then other dimensions on top of that, like the time, the volatility, all those things, right? So to answer your questions, very briefly, AMMs are really good for spot markets because spot markets are very simple and they're not multidimensional. They just really have the price component, but they sort of uh, lose their utility when the asset itself becomes more complex. So they become time aware, they become volatility aware, all those kind of things. And then just to add to the final point, if you introduce margining, which is where most of the liquidity is concentrated in, so futures, margined options, things like that, AMMs just don't work at all because they always require over collateralization.
Amazing. And I actually, this second point, I think there's maybe like a couple pockets of questions from JSM, but so you're saying asking because he liked your work on Squared and CFMM based designs. And then he's left us hanging on what actually happened back in 2021. But I just thought I would toss that out there as some praise for what I assume is your past work. And
I can answer that question if you want. I don't know if this is Max who's asking the question because it does feel I feel like nobody ever reads my articles. But regardless, I do think there's a lot of potential for using CFMs to price very specific things, but they're very, very bad at being the instrument that people trade. So, like a prediction market or a volatility market, where it's very simple for people to just pool liquidity and then use it as a way to price things. CFMs will probably do a pretty good job, and probably more exploration should be done around those kind of markets. But as an actual tradable instrument, like a futures contract or an options contract, CFMMs can't really replicate that, or at least not the way that I thought back in 2021.
Fair enough. And then actually, maybe this is the same question or a slightly different one, but we'll give, and for folks who are watching either on YouTube or on X, do feel free to drop questions in. As you're seeing, we'll answer them if you have them. This is maybe just a question suggestion, but yeah, spot markets or of any asset types. Maybe that's the end of the other question that got cut off, but I don't know if you have anything more to say there or if you have a question back for what context you'd need there.
Yeah, I am a bit confused on that question.
So yeah, give us the rest of that question. And then we will happily answer from there. But kind of in the interim, I will go kind of back to some of my own questions for you. But so we talked a lot about kind of some of the technical things that you've come up against, and we talked a little bit about like finding that product market fit and getting customers and some of the challenges there. I'm curious, I'm not an expert, but I imagine that finance in general and potentially frontier FX is, particularly challenging market to crack. And we've talked some about that, but I'm like, what's the sort of space look like for regulators, for, broader customer trust? And is there any like non-technical obstacles that you found that we haven't talked about yet?
Yeah, I would say Frontier FX is probably mostly non-technical in its problem set. It's mostly about, it's more of a coordination issue of anything. It's about getting all the stakeholders together and creating a good market structure. For the regulators, I would say this is probably where I'm most excited about stablecoins and the reason why I've chosen to build on them. To me, stablecoins act as a programmable interface on top of local banking rails. And so, where it would be really difficult for me to get a bank account in Nigeria, being a non Nigerian citizen, it's really simple for anybody in the world to just build on top of a stablecoin that's issued on a consortium of banks. And that's really fantastic because for a country like Nigeria, where you have really stringent FX controls, having to not interface with a bank, but still have a stable coin that's regulated and represents a tokenized deposit in a bank is really fantastic. It's really it's comparable to building on top of an API for some sort of software application.
Yeah. So it almost has the opposite, which is like there's less of that restriction than you might otherwise find with a normal banking infrastructure. And I did actually get some context, which I think is useful. So the question was around, like you'd mentioned for CFMMs, they're only good for spot markets. And so then I think the question is like for spot markets of what or any particular asset types.
Yeah, gotcha. So I should probably be more specific. I don't think CFMs are only good for spot markets. I do think there is room for exploration using AMMs for possibly other types of assets like treasury bonds or treasury bills to spot assets, or even volatility tokens to regular spot assets. Unfortunately, getting the liquidity for this stuff is very difficult. So if you can crack the liquidity problem, then AMMs are actually perfect because they allow you to price this stuff on very low liquidity relative to a full order book exchange. And then for specific spot assets, yeah, I think they're really good for spot assets where there's a lot of retail flow. And so cryptocurrencies have a lot of retail flow for the most part because there's a lot of speculators, but then also FX because payments, anytime we're doing a payment between currencies, that is effectively a retail flow or in market microstructure, non-toxic order flow. So if you can get that, then the spot AMM is actually really, really well suited for.
Yeah, that makes a ton of sense. Unless there are other immediate questions, let me just double check. I want to actually flip us a little bit to a slightly different topic. So we talked a little bit about kind of your founder journey, but I'm curious, what made you decide to, start a company, and how has the shift been from, maybe just primarily being a builder to actually being a founder? I imagine that that's something that's on the mind for a lot of folks who are, watching or who will watch, that are weighing that for themselves. So I'm curious, what was your own kind of journey into becoming a founder?
Yeah, I would say originally it was out of exploration. I originally worked or founded this project with a friend of mine from college, and that was really just a means of exploring the space more. So using AMMs for derivatives trading. Now my intent or motivation has shifted a little bit. Unfortunately, the space is mostly companies building markets for speculators. So you see a lot of perpetual futures exchanges on, oil or, Bitcoin or Ether or, token launch pads. And, I've been in this space for a while. I've built a lot of tools and knowledge. The last thing I want to do is apply that towards a token launch pad. That sounds miserable. And so, when I was looking at the companies that I could join and work on hedging, or at least hedging solutions, there really wasn't any. So I thought, well, might as well just start my own project and see how far I can go and see if I can actually get to my objective, which is hedge FX risk.
Fair enough. So it sounds like you didn't see the job you wanted to be doing in the real world, so you just made it, or decided to work on it, which I think is exactly what a lot of founders would say. What's been the most rewarding part, and what's been the hardest part of being a founder, in your opinion?
Yeah, I would say it's mostly, 90% of the time it's pretty crappy, right? Because you're constantly dealing with, some form of rejection if it's, someone not liking your product or, someone that's doesn't believe in it or whatever it is. But I think the rewarding aspect is it feels like you're setting out or you're solving or you're getting, better yet, closer to solving the thing that you set out to do. Whereas
Mhm.
if you were working for another company,
Mhm.
you would be kind of limited to the objective that is defined by the company that you work for. And
Mhm.
that's not the case with Numa, right? I very much care about hedging frontier FX risk. It's crazy to me that
Mhm.
a lot of the infrastructure that we've built over the 40 years in finance that have made markets so efficient don't exist in frontier FX.
Yeah.
So, now that I have a job that I get to do to pursue that is a really rewarding thing. And I live in Nairobi now. It's a really stable weather. People are nice. It ends up only adding to that perk.
Yeah. So sort of like creating the space and the place that you want to be in. And you only really get to do that if you are the one in charge of, what you're working on and where. Um, I Do you have any kind of like feedback or advice for somebody who is thinking about like whether or not they want to start a company, or whether they or not they want to be a founder, like uh calculus questions they should be asking themselves, or just how to think about taking the leap?
Yeah, I would say it depends a lot on your motivations. To me, I define founders in two camps,
Mhm.
and both camps can be very successful. So there's like that one founder who's like the ultimate product manager.
Mhm.
They don't really care too much about what product or what the end goal is, but so long that the product has mass distribution and makes money. And so that person will start a company with an initial thesis. It won't work out, so they'll pivot to something else like AI
Mhm.
agents or
Yeah.
FPV drones or something crazy like that. And they'll just keep switching and pivoting until they find that thing. And for the
Yeah.
most part, that actually ends up working if your runway is long enough.
Yeah.
For me, that doesn't really work. That sounds pretty miserable. For me, I started this thing because I have a clear objective with a clear mission, and for
Mhm.
me, it's more about pivoting or being flexible on the way that you solve that problem as opposed to changing the problem itself.
Yeah.
And so those are really, to sum it up, those are really the two reasons to start a company. Either you're a fantastic product manager who's really good at business, really understands distribution, and can kind of crack the code, or you're someone that really cares about a very specific problem and you haven't found a job or anybody that's willing to pay you to solve that problem. So you kind of have to create that job for yourself.
Yeah, and I think this is a great call for all of the, Web3 and DeFi minded folks who care about a particular issue and are that more like, passion driven founder who have a thing they care about solving and aren't seeing the solution out there in the world. Um, to that end, so obviously you have a very specific goal for what you're solving with Numo. Are there other kind of green space that you would want to see someone starting to solve, either like with like on chain, or with DeFi, or just more broadly in the broader space, whether that's with like FX and foreign markets, or just more broadly what you see? I'm curious, like who else do you want to see starting companies that solve problems you care about?
Yeah. I would say the biggest need right now in crypto, from like a finance standpoint, are volatility markets. So the more technical term for that would be convexity markets. For an asset class, crypto being super volatile and not having a lot of instruments to trade that volatility, to me, is crazy. That is actually nuts. And if you were really, really good and were able to crack it and build these instruments to price and trade volatility on Bitcoin, you can, in theory, apply that to other asset classes as well, like oil. Like right now, oil is jumping like crazy because of geopolitical events,
Yeah.
and that translates to a lot of volatility. And so Hyperliquid has these perp instruments that you can use to go long and short. But really, if I was a trader, what I would do is I would try to build a variance swap, or I would try to trade, a convexity instrument so that I can actually earn on the volatility of oil as opposed to just going long or short. Because, long and short, your return is always going to be lower than betting on the actual volatility or magnitude, as opposed to the direction. So yeah, more and more people building volatility markets as opposed to these crappy delta one
Yeah,
instruments
that are like betting on one side or the other. Yeah, well, I suppose that's maybe like a free idea, and when you see it out there, we'll have to see if it came from somebody who's on this stream. But hopefully, you'll give Robert some credit if that inspires you to start building. So as we kind of get to the close here, what what's next for Numo? Like, what do the next couple months look like? What does the next year look like? I know a year is a really long lifetime, but I'm curious kind of like what comes next for you.
Yeah. So right now I have a ton of demand. So I figured out the demand side for this stuff. And my biggest problem is the supply side,
Yeah.
getting enough dealers to sell, call option exposures. So to fix this, what you really need is you need either a perpetual futures exchange, a dated futures exchange, or some sort of options exchange, with a perpetual futures exchange being probably the most likely. And so the next step for this is to build a perpetual futures market on these frontier FX pairs, and really getting liquidity around that so that I can get more dealers to sell call options and hedge their risk on the exchange, as opposed to finding their own counterparty or bank to hedge it.
Yeah. Very cool. I mean, like I said, I really love this idea. So I have, it makes sense. Like through this conversation, that's the next challenge, is actually getting both sides of the exchange, active and working. I will give one kind of last all call for anybody who's watching. If you have any final questions that you want to ask Robert, feel free to drop them in. But while we see if there is any other questions, if anyone is interested in this, how should they get a hold of you? Yeah.
Oh, you're asking? Yeah, you're asking.
How do people get in touch with you if they're interested?
Yeah, I would say, I'm active on Twitter, or as active as I can be. My username is just my first name and my last. So Robert Leifke. And then I also have a website, Numo FX. It's open to anybody. So if you're a micro lender in particular, you can sign up and start buying call options tomorrow if you want to on Nigerian Naira. So those are really the two avenues to contact me: is either grab my Twitter and message me there, or just check out the website and create an account.
And I will drop your Twitter profile into here for folks as well. And actually, one thing so right now for Numo, primarily the exchanges are in Nigerian Naira, or like, are they more broadly across currencies?
Yeah, right now we support 4 currencies. Nigerian naira, Kenyan shilling, Ghanaian cedi, and Kenyan shilling. Or I said that already, right? Kenyan shilling. As it was as Zambia is the fourth currency. For the most part, the demand is coming for Nigerian naira, and so a lot of the market structure or a lot of the market instruments that I'll be building will be around the Nigerian naira, just because that's where most of the demand is. But in theory, if you create an account, you can buy a call option on any of those four currencies.
Gotcha. So there are actually a couple different options. I know we've talked mostly about the Nigerian naira. And then just as kind of a very last thing, anything else we didn't talk about that you want to mention, either about Numo or about the space more broadly?
No, I mean, I would say maybe the last point would be, hopefully, if you're looking to join the Atrium hackathon, please try to build something that's more than a token launchpad or something like that. Really try to push yourself to build something useful, because crypto is unfortunately this weird cycle where you know retail traders pay for the stuff that gets created. So people then optimize the stuff, which is the casino, so that more retail traders come, and it creates a self-fulfilling cycle, right? So it just requires a few people to build something else, get different types of users, so that other people can start optimizing for those users and move crypto away from being just a casino for speculators to being, hopefully a financial system for more.
And that actually, one other question that I want to drop in here really quickly, which I think is a good one, and I want us to get in here. Why Africa first versus, say, Latin America?
Because I don't speak Spanish, and then also I mean, the two main markets that I was thinking of originally was either go to Argentina, because their inflation is crazy, or go to Nigeria, because their inflation is crazy. The reason why Nigeria won is because Nigeria people speak English, and in Argentina they don't. So it's a lot easier to find micro lenders when you speak the same language.
But I do think I know JMS, and reach out to Robert. Maybe you are the start of Numo in Latin America. As you, maybe this is the next piece. But also, you can't be in two places at once, right? So tactically, you needed to decide where you could be most effective, which was somewhere English speaking. But perhaps this is the start of LATAM Numo. But yeah, that's a great point also, which I think, to kind of pull back to that broader question of like, the decisions you make as a founder, sometimes they're just really, really practical. Like, I don't speak Spanish. I'm not going to be effective at launching this first somewhere where I'm not going to be able to communicate as well as I need to. And yeah, that's pretty straightforward and simple math there. The last point you made around building something that has kind of like real world purpose and value is a great segue for me to say the next cohort for Uniswap Hook Incubator actually starts on April 9th, and applications for it close on March 29th. So to this point, if folks on the call have not already gone through the program and are interested in joining, we dropped the link to apply. And it is kind of a 6-week intensive learning experience where you learn everything you need to know about Uniswap v4, and then you'll spend 3 weeks actually building out a project. And there's the chance to win prizes from either Uniswap Foundation or other sponsors, and to focus on kind of different problems to solve in the DeFi space. And, Robert's laid out, I think, one that doesn't get as much attention as it probably deserves. And there are definitely some other opportunities to build really unique things. We also, our current cohort is closing their hackathon this week. And I know we've had some really cool folks building things that are pretty interesting. Like one that comes to mind is somebody who's building out kind of like feminine hygiene product deliveries in places where access to that isn't widely available, and how you actually can use like on-chain verification to make sure that deliveries get where they need to go. So there's a huge wide space of different opportunities for what you can do on chain. And I think it's a great reminder that it's not necessarily always just segmented to like what is most in vogue at the moment, but can start to solve really real world problems. On that note, I am going to close us out, and just a huge thank you, Robert, for your time and the conversation today. I think really, really interesting. And I know something that I personally just find like fascinating and want to see more of in the world as, builders find their niche in DeFi and in the, Uniswap community. But I appreciate you taking the time to talk through this, and excited to see how Numo continues to grow. All right. So I'm going to go ahead. Actually, I'll let you, say if you want to say anything.
No, I just said awesome.
All right. Well, in that case, I'm going to go ahead and end us here. So thank you, everybody, for joining, and have a great rest of your day.
Sweet. Bye, Teresa.